Welcome to our deep dive into LYFT Inc. Today we're putting this stock under the microscope to uncover what's really happening behind the scenes. If you're ready to analyze LYFT from every angle, you're in the right place. We'll break down the recent price action, trading volume, technical indicators, and possible scenarios for the next trading days. Whether you're a seasoned trader or just curious about the market, this analysis will give you a comprehensive view of LYFT's current momentum and what might come next. Let's get started and see what's driving LYFT's recent surge. Let's kick things off with a general overview of LYFT's recent performance. Over the past 3 months, LYFT has shown significant volatility but with a remarkable upward trajectory. Starting around $14.53 in June, the stock dipped to a low of $13.41 in early August. But then something interesting happened. A powerful rally pushed the price all the way up to $22.84 by mid-September. That's an impressive gain of about 70% from its August low. The price action reveals a clear pattern of higher highs and higher lows, signaling sustained buying interest and strong momentum. This sets the stage for our deeper analysis. Now let's talk about price and volume, two key factors in any stock analysis. LYFT's trading volume has been quite variable, but there was a huge spike on September 17, with over 101 million shares traded. This surge in volume coincided with the price jumping to $22.84, showing strong interest from both institutional and retail investors. When volume increases on up days and drops on down days, it's typically a bullish sign. The Chaikin oscillator, which measures money flow, also supports this positive outlook. All signs point to accumulation and growing confidence in LYFT's upward move. Moving averages are a great way to gauge a stock's trend, and LYFT is currently trading well above all its major moving averages. The 5-day SMA and EMA are both below the current price, while the 200-day averages are even further below. This alignment, where short-term averages are above long-term ones, is a classic sign of bullish momentum. The 10-day TEMA is also showing strong recent momentum. When a stock is this far above its averages, it's a clear signal that buyers are in control, but it can also mean the stock is getting a bit overheated. Let's dive into the technical indicators. The MACD is positive and the histogram is also in bullish territory, confirming upward momentum. The RSI, however, is at 81.9, which is considered overbought. Other indicators like Williams percent R, MFI, and stochastic are also signaling overbought conditions. The CCI is extremely high and the ADX suggests a strong trend. The Arun up is at 100, confirming the uptrend, while the ultimate oscillator also supports the bullish case. All these indicators together paint a picture of strong momentum, but also warn us that the stock might be due for a breather soon. So many indicators in overbought territory. What does this mean for LYFT? Overbought signals suggest that the stock has moved up quickly and may be due for a short-term pullback or consolidation. While this doesn't guarantee a reversal, it does mean that traders should be cautious. High RSI, Williams percent R, and stochastic readings often precede a pause in the rally as some investors take profits. However, strong trends can stay overbought for longer than expected, so it's important to watch for confirmation before making any moves. Even though we don't have the exact linear regression values, the strong upward price movement and the position of LYFT above its moving averages suggest a positive slope. The TSF14 value is below the current price, which supports the idea of an ongoing uptrend. Linear regression helps us visualize the overall direction of the stock, and in this case it's clearly pointing up. This reinforces the bullish outlook, but also highlights the importance of monitoring for any signs of trend reversal. Looking ahead to the next trading day, LYFT closed at $22.84, and with the current bullish momentum, there's a good chance it could open even higher, possibly in the $23 to $23.05 range. However, with so many overbought signals, there's also a risk of a flat or even lower open if profit-taking kicks in. The fact that the stock closed near its high for the day suggests continued bullish sentiment, but traders should be prepared for volatility at the open. Let's break down the key resistance and support levels for LYFT. The immediate resistance is at the recent high of $22.84. If the stock breaks above this, the next target could be around $24. On the downside, the first support is in the $20.05 to $21 range, which lines up with the 5-day EMA. There's additional support at the 10-day SMA around $18.89. Since the current price is well above these support levels, it shows strong momentum, but also means there's room for a pullback if the trend reverses. Bollinger Bands are a popular tool for measuring volatility. LYFT's price has already surpassed the upper band at $21.23, which is a sign of exceptional strength. When a stock trades above its upper Bollinger Band, it often means the move is strong, but it can also be a warning that the stock is overextended. Traders should watch for signs of a reversal or consolidation, especially if the price starts to move back inside the band. Average True Range, ATR, gives us an idea of how much LYFT might move in a single day. With an ATR of 1.03, the stock could potentially swing up to $23.87 or down to $21.81 in the next session. Given the current uptrend, an upward move is more likely, but the overbought conditions mean a downward correction is also possible. ATR is a great tool for setting stop losses and planning trades, especially in volatile markets like this. Let's explore the bullish scenario. If LYFT continues its upward momentum and breaks above the $22.84 resistance, it could quickly move toward $24 or even higher. This would likely be supported by continued high trading volume and positive technical indicators. In this case, traders might look for opportunities to ride the trend, but should also keep an eye on overbought signals for any signs of exhaustion. Neutral scenario, LYFT could enter a consolidation phase, trading in a range between $21 and $23. This would allow the market to digest recent gains and relieve some of the overbought conditions. During consolidation, price action tends to be choppy, and traders often wait for a breakout in either direction before making big moves. This scenario is common after a strong rally as the stock takes a breather. Now let's consider the bearish scenario. If profit-taking sets in, LYFT could experience a pullback, potentially falling back to the $25.21 support level or even lower to the 10-day SMA at $18.89. This would be signaled by increasing volume on down days and weakening technical indicators. For traders, this is a reminder to use stop losses and manage risk, especially after such a strong run-up. One of the most notable aspects of LYFT's recent rally is the high trading volume, especially on up days. This suggests strong institutional interest, which can provide additional support for the stock price. When big players are buying, it often leads to sustained moves, but it's still important to watch for any shifts in volume that might signal a change in sentiment. Given the overbought conditions and recent volatility, risk management is more important than ever. Traders should consider using stop-loss orders to protect gains and limit losses. It's also wise to avoid chasing the stock after such a big move and to wait for confirmation before entering new positions. Remember, even the strongest trends can reverse quickly, so always have a plan in place. LYFT's current rally is a textbook example of strong momentum, but it's also a case study in overextension. When a stock moves up rapidly and leaves its moving averages far behind, it can be vulnerable to sharp corrections. Momentum traders love these setups, but they also know to watch for signs of exhaustion like declining volume or bearish reversal patterns. Let's take a closer look at volume patterns. In recent weeks, LYFT has seen volume increase on days when the price moves up and decrease on down days. This is a classic sign of accumulation where buyers are stepping in and supporting the price. If this pattern continues, it could fuel further gains. However, a sudden spike in volume on a down day could signal the start of a reversal. It's important to distinguish between short-term and long-term trends. LYFT's recent rally is impressive in the short term, but the long-term moving averages are still catching up. If the stock can hold its gains and consolidate at higher levels, it could set the stage for a longer-term uptrend. But if momentum fades, the price could quickly revert to its longer-term averages. MACD is a popular momentum indicator, and for LYFT it's currently positive, with the histogram also supporting the bullish case. This means that the short-term moving average is above the long-term one, confirming upward momentum. However, if the MACD starts to turn down or the histogram shrinks, it could be an early warning of a trend reversal. Relative Strength Index, or RSI, is a measure of how overbought or oversold a stock is. LYFT's RSI is currently above 80, which is well into overbought territory. While this doesn't guarantee a pullback, it does mean that the stock has moved up quickly and could be due for a pause. Traders often use RSI to time entries and exits, especially in fast-moving markets. Stochastic Oscillator is another tool for spotting overbought and oversold conditions. For LYFT, both the stock K and stock D are in overbought territory, which means the stock has been on a strong run. While this can last for a while in a strong trend, it's a signal to be cautious and watch for any signs of weakness. The Commodity Channel Index, or CCI, is extremely high for LYFT right now, indicating strong upward momentum. While this is a bullish sign, extreme CCI readings can also precede sharp corrections. It's another reason to stay alert and be ready for potential changes in trend. The Average Directional Index, or ADX, measures the strength of a trend. LYFT's ADX is above 37, which is considered strong. This means the current uptrend has real staying power, but as always, it's important to watch for any signs of weakening momentum. The Up indicator is at 100, which is the maximum value and confirms a strong uptrend. This indicator measures how long it's been since the last high, and a reading of 100 means the stock is making new highs. It's a powerful confirmation of the current bullish momentum. The Ultimate Oscillator combines several timeframes to give a more balanced view of momentum. For LYFT, it's above 70, which supports the bullish case but also hints at overbought conditions. This indicator helps filter out false signals and gives traders another tool for timing their trades. The Time Series Forecast, TSF, is another way to gauge the trend. LYFT's TSF 14 is below the current price, which supports the idea of continued upward momentum. As long as the price stays above the TSF, the trend is considered intact. This is a useful tool for confirming the direction of the move. After a big rally, profit-taking is a natural part of market psychology. Some investors will lock in gains, which can lead to short-term pullbacks. Understanding this dynamic helps traders anticipate potential reversals and avoid getting caught on the wrong side of the trade. Always keep an eye on volume and price action for clues. Sum up, LYFT has shown a remarkable recovery in strong bullish momentum, gaining about 70% from its August low. Technical indicators confirm the uptrend, but many are in overbought territory, suggesting a possible near-term pullback. Traders should watch for a break above $22.84 for continued momentum or a failure at this level for a potential pullback. High volume on up days suggests strong institutional interest, but a cautious approach with proper risk management is essential. Thanks for joining us on this in-depth analysis of LYFT. Whether you're bullish, bearish, or neutral, understanding the technical landscape can help you make better trading decisions. Remember to stay disciplined, manage your risk, and keep learning. If you found this analysis helpful, be sure to subscribe for more market insights and updates. Until next time, happy trading.